How's it going, guys? It's Rafi from Beyond the Huddle, and welcome to this week's Bitcoin forecast. As always, I'm going to walk you guys through the SMI. That's the sentiment indicator for the entire exchange crypto market. That's the spot market, and then we're going to walk you guys through the COT to see what the asset managers have been up to, whether they're increasing positions or decreasing their positions. And then we're going to wrap it up with some volume and price action using our BTH volume profile indicator and our USDT bias to gauge whether the USDT prices should be bullish or bearish. So with that being said, let's get started. Okay, guys, so this one here is one that we haven't shown in a while, and that is basically, instead of showing you the 2-week rolling basis, like what we used to have on the SMI indicator, right? For the past months, I've been showing you guys only 2-week bits of the indicator. This is actually a 90-day SMI, and as you can see, I made this post here on the Discord group, and you guys can find the link to that in the description below if you want to join the community chat for free, just to get some questions or some alpha or whatever you guys are looking for there. But essentially, I was trying to get you guys to point across that, the market's going up. Maybe some of you guys missed this bottom right here. So this is Bitcoin's price overlaid on the SMI, and you can see that basically what I was trying to point out is that the times to make decisions are when the SMI is under strong accumulation. You can see there was a couple of blue bars here, and then obviously we turned bearish when this big down move happened right here. So then you had to wait for it to turn into strong accumulation again, and that ended up being the low at $34,000 right there. And then you can see right here that we went off to about 45K, and we went through all that time period. Then you turned to distribution, and then the only other times you were making buy decisions again was the strong accumulation here. There's one little bar here that got this up move, and then there was this bar here. And ever since then, the idea that I've been trying to get across in the premium chat is that, at least for myself, using this one, because I am a swing/position trader, I don't feel comfortable really adding any aggressive size or positioning during this distribution, because I know that during this up move there's a lot of strong selling that's going on. Okay, so it's only a matter of time, and this is posted on the 4th. Now on the 6th, we can see that the market has, I don't want to say collapsed, but it's down. Let's see, let me measure it real quick. The market is now down almost 10% on Bitcoin. So imagine what your altcoin might be down, okay? And that's exactly the point. You don't want to chase the market when it's running away, and the SMI, the sentiment indicator for the exchanges, is the perfect indicator for you guys to gauge that sentiment and whether you should be, looking to be position for buying or position for mostly selling. Okay, now again, that doesn't mean there wasn't buying opportunities throughout this right here. And actually what we're doing is we're looking to come up with a shorter term SMI where people who want to maybe day trade can do it. There was actually 3 buying opportunities with some of the stuff we've been testing using a lower time frame SMI, 3 buying opportunities throughout here. But using this specific SMI, when you're supposed to be, being aggressive with your portfolio and trying to pick a local bottom, that has not happened ever since, March 12th and late February. You can see right here, and then before that it was January. So again, very, very strong for you guys to understand that. Very, very important. That's when you really want to be positioned to make decisions. So what does it look like now? So I said that, we used to look at it in 2-week intervals, but now we switched it to actually only look at 30-day intervals. Again, we want to be giving ourselves larger sets of data so then we can compare it to whatever the current price is. So you can see right here, that's what I was just talking about. Again, we accumulated our positions during February and January, and then early March. So we should have been looking for distribution, and that's actually what I did. I was looking for my distribution of my Zcash position. Obviously you guys already know that went up quite well, about 100 and something % there. So right now we have finally hit accumulation. And what we were waiting for this entire time here was for us to break some type of important weekly level. And I'm going to show you guys later in this video, using our volume profile for our BTH volume profile, exactly what important weekly level was broken earlier this week, which I talked to about with the premium chat group on Monday. And it came to pass, and now we're down, I think we're down about 6% on the week, 7%, almost 8% on the week from that level. So pretty nice that worked out. Obviously, it's not nice that the market goes down, but this SMI needed to cool off. We knew it was coming. We were waiting for that weekly. Again, you can day trade. I showed you guys a couple of weeks back in the daily models that could tell you if then the weekly will get broken and whatnot and so forth. But we finally got that this week, and look what happened to price. So what I'm looking for right now is, again, I don't like to make decisions unless we're at strong accumulation, but if the value areas for my volume profile tells me that we're going to start bull trending or hit some strong upside, and all I can get is this accumulation, then I might take a stab at it. But I really only want to get aggressive, guys, when strong accumulation hits the market. Okay, so with that being said, that's what the SMI for the spot market looks like at the moment. And again, this is a 30-day rolling basis here. So let's move on to the COT. Okay, guys, so now that we've seen the SMI start to cool off, now we can go back and look at the asset managers to see how they're positioned. Now, remember, these are the people that will tell you what the longer-term trend of the market should be, because they are the large players and they carry a lot of influence in this market. So we focus on the asset managers here. That's the institutional money, and you can see that their longs went up quite a bit, actually, by 523 positions, and their shorts went down aggressively, and this is exactly what we wanted to see, guys. They went down by 202, so now we are an outstanding 91.7% long. Okay, this is incredible, exactly what we wanted to see. And think about it, okay, we have the if I come here to the SMI, right, we have them being positioned percentage net long, and now we're starting to see the lessening of the shorts get more and more aggressive. And as long as we can keep seeing their shorts stay below the average, that's that white line right there, then we can start to, like I said, and I keep saying, we can start to imagine and drool and wonder if we can get another September of 2020, or if we can at least, at the very least, try to repeat what happened back in July of 2021, where Bitcoin went up 70%. So again, we have been expecting this ever since this drop here when we hit this weekly demand. Right, we can see this right here. Again, I don't want to get too much into price, but I do want to keep reminding you guys every single week that when this level got hit, we're asking ourselves, well, what could change fundamentally? And right there, they lessened their shorts. So that told us that, that was probably a good place for them to make a low in the market. And then look right here, the longs, again, they just keep making higher highs. This is a brand new all-time high in these longs. So for anyone thinking that we're going to hit a bear market, or that we're going to, the interest rates are being raised and we're going to repeat a 2018. I mean, that might happen in the long term, but at the moment, I just don't see that happening. And, the funny part is that the later stages of 2017, that right there, between 2016 and 2017, I think I'd have to go check after this, so I'm not, saying things without facts, but I do think I recall Suzu, if you guys know who that is, him saying that, that 2017 bull market was actually, done during interest rate increases, okay? And then the 2018, peak happened. So there's definitely, this drop right here could have been the pricing in of that interest rate hikes. And then now we can get maybe one rally higher to then, give us the peak of this cycle. And then that's the one that we want to be selling into. Again, they're still position percentage net long, so I don't see why you should be afraid right now. Now, I'm going to give you guys, I wanted to wait for Misha to talk about it tomorrow. I don't know if he'll cover it or not, but I'll give you guys a little sneak peek. I actually wrote about this on our Discord. You guys can go check that. It's under the charts tab. And you can see right here that last time that this is the Ethereum COT, by the way. Last time the Ethereum COT, the longs went above average. Again, that's the white line. You can see right here. You go above average. Prices went up 180%. Look what just happened for the first time right now, guys. The past week, as of last week, the longs finally went from 0 to 46. Someone in this market with very large money thinks that the altcoin market, and I'm saying altcoin market because Ethereum is like the gateway to all the altcoins. That's why I'm showing it as total too, not as the price of Ethereum. And remember, the average altcoin went up 180%. There was some you know, the gaming atmosphere or gaming ecosystem, that one went up thousands, right? You had other coins like Sol that went up 1,200. You had a lot of coins that pumped way more than, you know, 180% because that was just the average. So I can't just imagine, you know, or I can just imagine what the next rally higher is going to be, right? Is it going to be, you know, 50% to a new all-time high in this total 2 market? Is it going to be, you know, more than that? I don't know, but we need to keep a very close eye on it. And the key here is the longs finally joined the party, and that was what we were waiting for. Because last week, what we talked about was the shorts going below the average. They were just a tiny bit below the average. And look what happened this week. Again, Misha's going to go over it. He's going to break it down. But I wanted to give you guys a little bit of taste. Look at this right here. When the shorts go below the average, boom, right here, they stayed below the average. The minute they went above the average, that happened to be the high in the market, guys. This is not rocket science. You can follow the asset managers, the large funds, the smart money too. You just have to know how to do it, and then you have to use your price action, so our volume profiles and our SMI to get in sync with that. So we did get the bullish signal here, but now we knew that price, you know, in the short term for a week or two has the potential to retrace because the SMI was just too overheated. That's how you add the exchange spot market and how you add the leverage funds in the asset managers into all this, okay? So now that we've covered both of those two, let's move on to the price to see what potential levels we could be looking at for some support. But I'm telling you guys, there's going to be an altcoin bull market as long as this stays right here like this, and it's going to get very, very juicy. So you guys need to get ready, and you need to find whatever your TA is, whatever your edge is, and get ready. So let's move on to the price. Okay, guys, so to wrap it up here with the volume and price part using our BTH volume profiles and our USDT bias, I'm going to fly right through this, so I hope you guys can keep up because I don't want to make the video too long. We're already at 12 minutes-ish, so let's do this about 3 or 4 minutes long. So first of all, of course, the first thing you do is you check your value areas, so let me double click on this so the lines don't get extended. You guys can then see exactly when the week ended and started. You can see right here, the new week opened right there. And then what we did was that we came down, we tested the USDT bias, right? That controls the weekly bias, okay? And the idea is that as long as you're above that, you're going to expect bullish prices for USDT pairs. Now you can see we went up. Now when we went up, what did we do? We hit the previous week's POC and then we rejected below. So when we rejected below that level right there, I was telling everyone in the premium chat that, and there was the beautiful retest right there, that when this down candle happened, I was looking to de-risk into the market because we're bear trending on Bitcoin. Our next level of support was going to be these two zones right here. Now if we zoom out a little bit, again, I'm going to double click on this so we don't extend it. And again, these are the volume profiles. The white one is the quarterly and the blue one is the monthly, okay? So right now, the very important reason, the reason why it's so important right now is that we're sitting on the prices that will dictate if this current monthly candle on Bitcoin will stay bull trending. Now remember, bull trending means that I'm expecting expansion for this monthly candle. Very, very important stuff because you guys already saw the past couple months. If I come here and I double click on it, so then I can show you guys the previous months. You can already see how price in the month of February stayed within the month of March. Let me get rid of the quarterly there, right there. So you guys can already see how the month of February right here stayed between, let me separate it for you guys so it's much easier to see. There it is. You can already see how the month of February stayed within the month of March, and then the month of March only up until the very last few days of March were we able to finally go above the value of February. Now remember, I'm not going to get into breaking down what the value areas are. You guys can find out on our website at beyondthehuddle.com. Go check that out and why that's important. But essentially right here, we want the market to stay bull trending, because again, that means we expect higher and aggressive prices to the upside. Now, the reason why I was looking for this weekly, remember, we were waiting for a weekly model to get broken to the downside, and that happened this week. Boom, straight down. That's because the SMI was too aggressive. There was a lot of distribution, and now that we've cooled off, you guys have seen we've hit a few bars of accumulation. Not strong accumulation yet, so maybe we could see one slight move lower again. I actually would love that, so then we can finally hit strong accumulation. And remember that because we're above this purple zone right here, that means that the month of April, we would expect it to be bullish. Okay, now that makes sense because April is usually one of the most bullish months in crypto. And expecting higher prices for that entire month would be nice. So if we do fall below this value area high, and remember that's also the quarterly, so if I come here, there you go, that's the quarterly as well. So if we do fall below this, then that means we're working within last month's range, and we would have to target a drop of about another extra 10%. But remember, the CLT is already positioning us to expect aggressive upside. Now the question is just, when is the market going to confirm that? Now the way that I work is I don't like to buy even if I hit my support, right? So even if I reverse here and go higher, because I'm a position / swing trader, I have to wait for my weekly support to get reclaimed. So what would that be? Well, this value area low right here, right? Because that's what dictates whether I keep bear trending or bull trending. The same way that bull trending is really nice for us, when we start to go below those levels, bear trending is really bad for us. Now, someone who's a day trader, they could go to the 1 hour chart. You can see right here the daily model. They could then wait, for today to close, and then use that daily model to get into the market, be a bit more aggressive, and they don't have to wait for the market to completely reverse. So if I come here, hide everything, you can see, let me show the current profile as well. So maybe tomorrow, right? Let's say prices close right now, you'll be within today's tomorrow you'll be within yesterday, which is today's value area, and that could be thought of as a reversal, and then you would be trading from that level to that level. But again, that's all day trading type of stuff. We talk more about that in the BTH premium group if you guys are interested. I'm much more of a swing / position trader, but we're more than happy to help you guys with your short-term trading, and that's exactly what we're thinking, and testing out the waters with this day trading type of SMI, so we could capture these smaller time frame moves as well. So with that being said, guys, I hope you found some value in this video. I hope you enjoyed it. I hope I didn't make it too long. If you did, please make sure to share, subscribe, and I'll see you guys next week. Talk to you guys soon. Peace.